Thank you for joining us one more time. The International Monetary Fund has painted a grim economic outlook, saying that inflation, debt, and food crisis are pushing the Nigerian economy and other African economies to the verge of collapse. The managing director of the IMF, Kristalina Georgieva, disclosed this in a report titled "Facing a Darkening Economic Outlook: How the G20 Can Respond." The IMF also stated that most countries on the continent could raise money from the global financial market and do not have large domestic market to turn to. All right, let's extend this conversation further by assessing the importance of this statement of the Washington-based lender and the action point that should follow. All right, Mr. Olaolu Baboye is macroeconomics analyst as Cardinal Stone. He joins us now virtually. Thank you for your time. We appreciate you.
Good morning, and thank you for having me.
Yeah. All right. If you look at the managing directors of the IMF position, that's Kristalina Georgieva, noting that in her recent meeting with Minister of Finance and central bank governors from the African continent, he highlighted a lot of issues, which is about inflation figure, talk about debt and food crisis, pushing the economies of African countries like Nigeria to the brink. How is this coming to you?
Okay, so the IMF has raised three key concerns. The first is debt, second is inflation, and third is food crisis. I will begin with the first. The three issues that have been raised by IMF are actually prevalent in Africa, and it raises a lot of concerns. Firstly, on debt, when we check through the IMF debt sustainability model, which helps to measure the adequacy of different countries within the African space, we saw that at the moment, for the low-income countries, we see that more than half of the low-income countries are currently at the risk of debt distress, right, or at a high debt level risk, right? And this raises a lot of concerns. And you take, for instance, the example of Ghana. One of the things that played out this year in Ghana, we saw a lot of investors selling off on Ghana 6 euro bond. And the reason for this is because a lot of fiscal concerns in Ghana, right? Debt to GDP in Ghana, for instance, is over 80%. If you go to Egypt, debt to GDP is around 90-something percent. I think around 94% the last time I checked. And that's because of elevated debt. And this is not just peculiar to these two countries alone. It's across board, across the region. There's low revenue mobilization in the region. There's elevated fiscal spending in the region, government spending. Then there's also a lot of spending on debt servicing. Take, for instance, the example of Nigeria. Debt servicing is around 90%, when you compare it to the revenue. And all this is a valid concern, that the IMF has. And also, when you look at the fact that this that are net importers of.
Well, Baboye, I guess the internet is trying to mess up with the flow there. But I understand your point, the fact that Nigeria, of course, is not exclusive of this problem across the African continent, the issue of inflation.
Hello?
Yes, go ahead. Please continue on that thought.
Okay, so I was saying that this physical concerns is relatively prevalent in the region, right? We've also seen some of these countries, having subsidies. Subsidies is there in Ghana, subsidies is there in Nigeria, subsidies is there in Egypt, and some other African countries, right? All this continues to take a toll on the revenue of the government, right? And we've not seen significant reforms or policies being put in place to materially drive revenue upwards across this region. For instance, in Nigeria, no special reforms. If you go to Ghana, they came up with e-levy recently, right? But the performance of e-levy has been below expectation. So all this just tells us that revenue is low, debt is elevated. Secondly, on inflation, right? Inflation continues to skyrocket. It's not just peculiar to Africa alone. It's also something that is broad-based across the globe. But narrowing it down to the African region, if you divide Africa into two parts, number one is the net commodity importers, and then as well as net commodity exporters. So by commodities, we're talking about food commodities and as well as crude oil. So what we saw was that for the oil importers, the net oil importers and commodity importers, right, we saw that because prices are skyrocketing globally, it has taken a toll on import bills, which has had a pass-through to current accounts with a negative impact on currencies. When you look at Egyptian currency today, it's down significantly by almost more than 25%. When you go to Ghana, similar thing is playing out because these countries, they are net oil importers and net commodity importers, right? But for country, and this has been affecting domestic inflation, right? For countries that are net oil exporters, though inflation is there, inflation is still prevalent in those countries, but it has been at a slower pace than for net oil importers. And then finally on food scarcity, when you go to the Horn of Africa, which is basically the Eastern Africa, what we've seen is there's been a persistent story or a trend around droughts, right?
Right. Well, of course, that's the point you're making there, especially now that the unemployment rate is still very static. It's staggering at 33% or above 33%. And of course, Nigeria is known for basically importation, maybe not even talking about how much is being exported in the land. So the import bill rising by the day. Yes, I'm aware you're back, Mr. Boboye. Please continue from that thought, talking about the issue of unemployment and the fact that we keep importing as a nation.
Yes, so I was saying that aside from that inflation, on the third point that was mentioned by the IMF, which is droughts. When you go to the Horn of Africa, which is the Eastern Africa, what we've seen over the last 3 years is a perpetual case of droughts, which continues to take a toll on the agri sector. In that whole region, agri sector constitute a major is a major contributor to the entire GDP. For some countries, is above 20%, while for others is slightly below 20%. Cumulatively, this has badly affected that sector, affected employment in that sector. Basically, so what IMF has pointed out is basically a major concern in the region.
And the fact that if you look at the position also, the concern is that Nigeria at the moment is shut out of completely out from global, capital market. So it looks like the country is in a fix and there's no place to turn to. First, what are the implications of these? And what does this imply?
Okay, so it will be good to provide a bit of background, on how we got here and what it means to be shut out of the international market. So globally, what has been happening globally is high inflation. Monetary policy authorities are turning hawkish, and they are raising rates. The impact of this has drove yields, fixed income yields, significantly high. So now for African countries, and for countries basically, you compare a benchmark bond, a benchmark euro bond, you compare the yield movement, you compare that to the US. So for instance, if yield in Nigeria on euro bonds is around 12% for 5-year instruments, and you compare that to US and the 5-year instrument is around 3%, the difference gives us the spread. Now, any spread above 1,000 basis points is termed as likely defaults or a default risk, and you might not be able to access the international market. So when the IMF says that a significant portion of the region cannot access the international market, that is the benchmark that they use to gauge it. Now, breaking it down to Nigeria, it's a similar story, right? Yields are going up, and this has, will limit access to the international market. What will be the impact of this? Firstly, the budgets, if you look at the 2022 budget, half of the fiscal deficit is expected or half of the planned borrowing for the year is expected from the international market. We've done Eurobond of $1.25 billion, right? The balance, since we cannot access the international market, we'll have to come to the domestic market. Fortunately, we have a very robust domestic market, which can take or absorb this debt. Now, but on the impact of this is government will have to offer higher yields to investors at the fixed income market. That is
Because
the
that's
local.
where, yes, I was going to come down to that to see, well, the international market, I mean, funds are cheaper. I mean, you come into domestic market, it means that the cost, government will have to pay more for these. So it looks like government has no option than to borrow. But then again, can we say the country is at a fix where it's at a corner, tight corner, it can no longer get out, especially in a pre-election year?
Okay, so I'll start from the first part that you highlighted, that are we in a fixed part? We might not entirely be in a fixed angle, right? But before I go into that, let me start with saying that foreign funds are cheap. They used to be cheap. Now they're no longer cheap, right? To get funds now, you might be offering investors around 12% for Nigeria, and for some other African countries, close to 20%, which means that funds are no longer cheap. They are relatively higher than some domestic instruments. Now, can Nigeria still navigate? Yes, we can still navigate a market that is relatively robust. Government will have to pay more, compared to what they've been doing in the past. I've been seeing, if you look at H1, we saw that bond yield increased on an average by almost.
Well, I get your point there. The fact that yes, foreign funds or international markets are no longer cheaper compared to the past, and so the Nigerian government will have to look inward again. We also need to look at has the country reached its limit in terms of borrowing? That's another question that, of course, we have to look at as well. How much do we have? Yes, go ahead, please.
Okay, so yes, so like I said, we can still assess the domestic market. But the interesting thing is the market is not fully dictated by market forces, because we've seen the CBN comes into the market and absorb parts of the government debt through the ways and means, which is legal, but then there's a limit to it, which that regulatory limit has been breached in Nigeria, right? So Nigeria can still navigate, we can still borrow more on debt, but it will continue to take a toll, on our debt position, on our debt servicing position, which has implications in the future.
Even at 90%, because as it is now, the rate of debt servicing is it's alarming at 90% compared to what we earn as a country.
Yeah, it is. It is, 90% taking a major chunk of Nigerian revenue. Right. And that's why Nigeria continues to have a limited fiscal space. And you know that for Nigeria, the fact that we still maintain fuel subsidies, which, on the estimate annually for this year might be around 4 trillion naira, right? It just means that we might be in a more precarious state. We might be seeing more borrowings from the government. We might be seeing less capital expenditure for the government. And we might be seeing less programs, less major capital projects being implemented, which has a pass-through on overall economy, which has a pass-through on government fiscal position, and as well as the future impacts for the economy.
Just a moment. Again, let me also ask you, is it better, is it economically correct for the government to spend more, especially in a pre-election? All attention seems to be on the election ahead of the, I mean, of course, politicking and lobbying, ahead of the presidential election in 2023.
So theoretically, right, it's normal for the government to spend, right? Some economists will argue with you that the government needs to spend its way to development, which is valid, right? Which we don't dispute. But for the case of Nigeria, we've been having a lot of spendings which are not necessarily tilted towards productive things, things that will generate future cash flow. And that has been a major challenge. Now, in pre-election years, what we see is that there is more spending by the government, right? Both official spending and unofficial spending, which continues to take a toll on the finances of the government. While we might not be able to have official numbers to tell the stories, but from some of the reports,
Okay, so spending more perhaps from the government, again, the concern is that well, if you look at it as, again, some people believe that that could impact more on the rise, the increase in inflation rate at the moment, if we must contain or we have to tame inflation. Yes, Mr. Baboyi, please go ahead.
Yes, so that point that you were just mentioning, I think is a very critical point that it can have an impact on inflation. So let's speak it from this angle. The parallel market premium that we'll be seeing at the moment at the market is close to 620. Now, that premium compared to the official rate is partly or in recent time has been driven by pre-election year dollar demand, which has an impact on the CPI. That's the inflation.
Yeah, the inflation rate. Well, again, I was going to ask you, talking more about inflation, some believe that the rise in inflation figure and that it is not peculiar to Nigeria. Specifically, recently we saw that the U.S., inflation recorded 40-year high, which went up about 9.1% in June. So narrowing down on Africa or in Nigeria, can we say it's a global phenomenon, and or do we also have our own domestic factors or reasons why we're having, increase in inflation rate? Mr. Bubu, I don't know if you're back with us.
Yes, I'm back and I can hear you clearly. So inflation, like you rightly put it, is a global issue at the moment, right? And we've seen energy prices soar, we've seen commodity prices soar, right? For Nigeria, we seem to be a little bit shielded from the dynamics that is obtainable in the global environment, right? Because we happen to be a net oil exporter, which is beneficiary for us. But notwithstanding, the deregulated sectors like AGO, that's diesel, we've seen prices go up significantly there. Jump from about 200 and something naira, I think 270 naira, to almost 1,000 naira now at the moment, right? This has a pass-through on transport inflation. This has a pass-through on food inflation, because most trucks that are used to move foods, they are basically diesel engines. This also has a pass-through on core inflation, especially the HWGF, which is the largest component of the core inflation. It has an impact on it. So the global phenomenon happening there has a bit of limited, but it has a bit of pass-through to Nigeria. But we also have our own domestic issue in the country. We have insecurity there, which continues to affect food production. We have structural challenges, which continues to push up costs. We also have a borrowing cost that is a bit elevated, which is affecting the private sector. Right? All this cumulatively has an impact, on inflation.
How much time do we have as a country to address these challenges before we get into election year proper?
You see, the likelihood of these challenges are being tackled, it's a bit slim. And the reason for this is because this government has been in power for almost 7 years, right? The policy pattern and trend that we've seen over the last 7 years will likely not change in the last few months of election, right? It will most likely be shifted towards incoming presidents, an incoming government to tackle some of these issues and perhaps provide a solution to the clamors of Nigerians.
Okay. I mean, yes, there are lots of politicking and lobbying around. It's getting interesting indeed. If you look at the candidates, the various candidates of the political parties and their VPs as well, a whole lot of the conversations are ongoing in the polity at the moment. Let's look at key, because yes, some people believe that the next administration we have to battle with a lot of things, right? Just about what we discussed, the issue of inflation, the issue of food crisis is there as well. Let's wrap it up now with this. So what are some of the things which you'll watch out for, which you look out for in terms of indicators that are likely to shape the economy ahead of 2023 presidential election?
So I think that the incoming presidents will have to grapple with some, economic indicators that are not favorable at the moment, right? Number one, there is elevated inflation. Number two, there is huge wealth inequality in Nigeria. Number three, there is insecurity issue, which affects the economy also. There is also the issue of ASU strike, which has been there for a while, which has an impact, on the educational sector of the country. There's also issue of elevated unemployment, about 33.3%, which is higher than what is obtainable on an average in the SSA region. There are also other issues there, infrastructural deficits, which the administration that is coming on board will have to tackle. So we think that the incoming government should, look at some of these key indicators and, start building capacities along the area and, thinking of possible solutions.
I think we'll have to leave it there. Ola Olubaboyi is macroeconomics analyst at Cardinal Stone. Thank you for your time on Business Breakfast. Have a great day.
Thank you for having me. And you too.